This morning that digital payments company Stripe is in talks to go public as soon as next year with a valuation of nearly $100 billion. That's like the white whale of private companies right now. My goodness, looking forward to Stripe. But our next guest says, don't forget about those bigger established fintech players as we focus on the insurgent names driving growth in the space. Joining us now is Wolfe Research Managing Director Darrin Peller. Darrin, first take a step back with us, please. So we're talking a lot about major technology platforms and the power that they have. But at the same time, Amazon, Apple both recently announced partnerships with Affirm in buy now, pay later. And, you know, Shopify already dealing with Affirm in that same space. And then we've got this App Store ruling from the judge, which many people expect could open up possibilities for other payments platforms. What is the opportunity in this space? Why are so many payments providers finding room to run where others in the big tech ecosystem are feeling pressured?
Yeah, thanks. Thanks for having me. I mean, look, when you start off with the notion that we now have a material increase in the amount of commerce spent online, up to the mid-teens percentage of total spending versus high single digits, really just pre-pandemic, there's so much more digital commerce going on than used to be, first of all. More importantly, millennials and newer and really younger demographics, they really want neobanks. They want digital experiences for banking. And so when you consider the fact that our estimates say over a third of total financial app downloads are now on neobanks, not the traditional banks, but newer fintech type oriented. And if you included PayPal and Square, it'd be 2/3. It really just shows why there's so much demand, not only from consumers, but for investors to add capital to these spaces.
And how much opportunity is there? I mean, in a way, a lot of people might have thought, hey, this problem is solved. PayPal was like 20 years ago, and yet not only has PayPal separated from eBay and created more investor possibility there, now we've got Stripe as a $100 billion valuation potentially, and plus a slew of other companies.
Look, I mean, as I said, first of all, we're only at mid-teens percentage of total commerce that's actually online right now. So we have a long way to go on that front. When you consider some more developed markets, considerably higher. And that's a global metric. But when you consider what I mentioned earlier with the digital wallet themes, think about buy now, pay later for a minute. There's been a shift to some consumer credit shifting from traditional consumer credit onto these BNPL programs. We estimate it's still only $80 billion of total volume. Think about that metric out of the $15 trillion of spend on Visa, MasterCard. So we have a long runway, even on buy now, pay later. And then there's even more themes. There's B2B payments. There's areas like software converging with payments that are really early days. And that's why investors are so excited to add more capital in these areas.
Darrin, in the face of all of these new players, including Stripe, which of the incumbents do you think is best positioned?
Well, first of all, I think there's been a couple of probably the biggest stocks in the market trading sideways, which is Visa and MasterCard. And, you know, I think it's important to keep in mind that even though these stocks have been underperforming now for relatively a year, since the pandemic, more or less, they're structural beneficiaries of the pandemic and all of that volume going online as well. There's a real concern that buy now, pay laters like an Affirm or a Square now with Afterpay are going to keep money in their ecosystem and therefore take it away from the cards. When the reality is you still use your cards to fund those Afterpay wallets or those Affirm wallets on the other side. So I'd say those names, which we view as being structurally stronger, given how much more commerce is online now, are probably among the best bets from our perspective. We also like B2B payments companies like Bill.com. But look, PayPal was our top pick last year. Square's been one of our top picks this year.